So, but I'm going to go ahead and start. If other people hop in, that's fantastic. So thank you all for being here today. We're going to just quickly go over jumbo loans and how they work, because as you guys know, in our county and surrounding areas, housing prices continue to go up. And so we are seeing more and more housing prices outside of those conforming loan limits, which means that you probably have more clients that are really probably getting closer to qualifying for a jumbo loan than a conforming loan. And so that's what we're going to talk about today. All right. So obviously jumbo loan. Go ahead.
What's the price for a jumbo loan?
So jumbo loans are literally anything that is $1 over and above the conforming loan limit up to, there's normally loan limit maxes, and normally it's around $3 million for what you can get a loan on.
So what is that amount in Solano County?
For Solano County, it's 726,600 right now. So if you do 726,601 and up, you've got yourself a jumbo loan.
Fabulous. And it's the loan amount, not the purchase price, correct?
Correct. Yes. Everybody, I feel like, gets that confused, but you can purchase $1 million home, and depending on how much money you're putting down, you can still stay within conforming loan limits. So housing price really has nothing to do with that. It strictly is off of how much money do you need to lend from one of our lending partners, not how much is the house going to cost you. All right, I'm going to skip this page because we pretty much
Got it. Thank you.
You're welcome. So again, jumbo loans are just mortgages that are basically used anytime you're outside of the conforming loan amount set by Freddie and Fannie. So when the banks use the term conforming loans, as I said, what they're talking about is anything that's within that conforming loan limit, which, as we all know, varies depending on what county you are selling in, especially around here. Because if you start heading to like Danville, Walnut Creek area, that conforming loan limit price is way higher than it is here in Solano County. So that's what normal banks tend to stick in the conforming loan limit. Some of them do have products for jumbo, but it really depends. A lot of them don't like to get into that world. That's where you get more into the wholesale brokerages. They're called conforming because of the fact that they conform to government guidelines regarding things like loan size, debt to income ratios, and credit scores. Come on, computer, work. There we go. This says about the only similarity between conforming loans and jumbo loans is that they're both used to purchase homes, which is true. And they really, while they are different and have very different guidelines in some respects, they're, as far as processing them for us or like doing an application for your clients, they're really not a lot different. It's just the requirements that we need to meet the regulations. So here's a couple of the differences. So jumbo loans are from the same bank that originally provides the money to the homeowner, while most conforming loans come from a lender and then get sold in the secondary market, which we talked about on one of the previous classes that I did for you guys. So to be considered jumbo loans, they have to be for a certain dollar. Jumbo loans are not government backed and do have higher interest rates than conforming loan limits. Because the dollar amounts are higher with jumbo loans, there is more documentation involved and higher closing costs than with conforming loans, which makes sense, right? If you think about it, every time your loan gets higher and higher, your closing costs get higher, right? So if you go into the jumbo loan arena, it makes sense that the closing costs are more money as well. So jumbo loan customers, in most situations, have to have cash or savings equal to a couple of months worth of their mortgage payment. It really depends on what product we're looking at and what lender we're looking at. So those regulations can change depending on who we're going through. Applicants for jumbo loans must adhere to stricter guidelines, such as having 2 home appraisals. Sometimes that is necessary, sometimes it's not. And again, it goes back to who we're working with. Does somebody have a question? No? Okay. All right. So this is just talking about some of the advantages. So jumbo loans offer tax breaks to borrowers who can claim interest on payments on loans up to $1 million. Jumbo loan interest rates are lower in the recent years, but so have every other rates until now, which, speaking of, please be prepared for a rate hike. So don't let your clients get freaked out. It's just what it's going to have to be for a little while. Private mortgage insurance is not required on jumbo loans, and that's because every jumbo loan product that we have requires 20% or more. So you're not going to have mortgage insurance on those products. Homeowners can buy luxury homes with the jumbo loans that they might not otherwise be able to afford. And customers with higher credit scores can also get lower interest rates with jumbo loans. So on that, jumbo loans, for the most part, let me go backwards. In conforming loan limits, we can work with people whose credit scores are as low as 580. I actually saw a product come out the other day where they're talking about doing loans from 500 and up. I have not looked into what they're going to require for that, but I will and try and get you guys some information on it. But when you're within those conforming limits, wow, I really just lost my thing.
So Jessica, with something like that, would they take like, you know, how with car loans, they take like 3 good ones and 1 crappy one? Is that what they would do with somebody with the lower than 580 credit score?
So on everything, every loan that we do, we have to take all 3 of your credit scores and we have to use your median credit score. So if we're looking at somebody who has 3 credit scores, let's say one's 460, one's 510, and one is like 580. They don't normally vary that much, just FYI, but let's say that that's the case. We're going to have to go with the 510 credit score, not the 460.
Okay, thank you.
You're welcome. So on conforming loan limits, you can work with a much lower credit score. With jumbo loans, they normally require a 700 or higher to move forward with those products, mainly because of the fact that they are lending you a lot of money. And so obviously the bank wants to make sure that you're capable of handling that payment. And the better your credit score is, the better it is for the banks. And on jumbo loans, you do see more of a price reduction for credit score than you do with conforming loans, because conforming loans are really pushing FHA right now. And so they want you in those mortgage-backed loan products. So they took away the big discount for having a good credit score with the conventional loans. And then the other thing I want to share with you guys. So when we come in and we're looking at jumbo loan products, there are different ones with different companies, but this is kind of what we're looking at for our matrices. A matrix just basically tells us what we have to meet in order to provide that loan to a client. So this is with one of our lenders. This is UWM. So you can see up here, this is our purchase and rate term. It comes in both 15 and 30 years for jumbo. And the maximum loan size here is $3 million on both of these. You can only do up to 2 units. Conforming loans, you can do up to 4 units and still stay within those products. But with jumbo loans, you cannot go above 2. And you'll see that they have different terms for primary, second home, and investment properties. Minimum FICO for them, if you're staying under the 2 million mark, is 680. But they will actually let you do 89.99 of loan to value on the property. So you don't have to do the full 20% down. It's better for your client if they can do the 720 or 740 with 20% down. As you can see, they won't let you go over 80% loan to value. And then when you get into the 2 units, for the most part, they're going to have to put down 25%. And then on second home, you can only have 1 unit. You can't do 2 with UWM. And for investment properties, they have a minimum of 20% down, And if you go up to like 2.5 million, a minimum of 25% down. And this is just UWM. We have so many lenders that do jumbo products that have different terms and what they require. They'll require, so let's see if this one says on it. So for this one, your maximum debt to income ratio can't exceed 45%, which is the same with conventional loans as well. So that's not really a weird thing. Minimum loan amount is $1 over the conforming loan limit. Max loan amount is $3 million. 3 to 4 unit properties are not allowed. And then it talks about our underwriting findings. Jumbo products are allowed to move forward with an approve ineligible if it's because of the fact that the loan amount or the cash out refinance is over 80% loan to value only. Otherwise, it's just like our conforming loan limits, and it has to get an approve eligible before we can move forward. And I'll show you guys this too. So every lender, and when I say lender, I don't mean myself. We are a mortgage broker. The lenders are actually the companies that we work with. So UWM has several different loan products that they can use with different overlays. So theirs are based on colors, depending on what they're providing, and it has different rules and regulations. And we have to go in, and it changes every product that we use. There's actually a sheet that they made to help you choose which jumbo product you should be using for your client, because they offer so many different products, which is a good thing. So when the housing prices continue to go up, if they don't move those conforming loan limits with them, then at least we'll be able to cover your clients. Oh, sorry. Oh, bless me.
Bless you.
Sorry. So there's not a lot to extra for jumbo loans. The other thing you should know is when they're talking about like months of mortgage payments, normally jumbo loans start at about 6 months worth of, they call them reserves that you have to have in your bank account after your close of escrow. So you have to have enough funds for your down payment, your closing costs, inspections, appraisal, all of that. And after you pay all of those at close of escrow, you still have to have an additional 6 months of that mortgage payment saved up in your bank account and available for use in order to close those loans. And sorry, I know that was a lot of information in a short period of time, but like I said, jumbo loans aren't super complicated. They just require a little bit more paperwork and documentation than the conforming loans. Other than that, they're pretty easy. There are also options, like the 80-10-10, which will keep you out of jumbo products when you're going above conforming loan limits. And that's doing basically an 80% conforming loan with 10% down. And then you're doing what is essentially a 10% HELOC or second mortgage to cover that other 10% of your down payment to make that happen, which is sometimes a good option for your client, but it really depends on what we're working with and what their individual situation is.
Are the interest rates higher on something like that for the HELOC?
Yes. Yeah. And HELOCs, HELOCs are a great product. They're very expensive right now, at least for us. For the most part, if you have a client who's looking for a HELOC, we're going to refer you to either Umpqua or Bank of the West, because our lending partners that are doing HELOCs right now, it's so pricey compared to what those two banks can offer. It's just not, it's not worth it. And we would rather your client be happy and get a product that works for them versus go with us just because of the fact that we offer that product. All right. Does anybody have any questions?
What's a HELOC?
A HELOC is a home equity line of credit.
Oh, okay.
Yeah. So basically, in a normal situation when you're not using it for an 80-10-10 loan, you're taking the equity that's in your house. And right now, most people have a lot of equity in their houses, right? Because they're just sitting in them. They're staying, they're not going anywhere because they've got those 2.5%, 3.5% interest rates, and they don't want to move because housing prices have gone up, interest rates have gone up. And so what they can purchase moving forward is smaller sometimes than what they have now. So a lot of people will just do, well, I'm going to get a home equity line of credit and we'll just remodel, or we'll add, if they have space, we'll add an extra bedroom, or maybe they throw an ADU in the back. Or maybe they just want to get rid of a lot of debt and then you do a HELOC cash out and then they can use that to pay off their debt instead. But it's using your home's equity.
And then how do you pay it back? It's like a regular loan?
So no, a home equity line of credit lasts for a certain amount of time. It just depends on what your terms are, but you can actually take money out, pay it back, take money out, pay it back for the life of that loan. But you do have to have it paid off by the time that your loan term comes to an end. So most HELOCs are like 5 to 10 years. And so you want to make sure that that money is put back.
Okay, thank you.
You're welcome. All right, what else do you guys have for me? This is literally open. Even if you don't have questions about jumbo, if you have questions about anything else, now is a great time to ask those. I'm like, I know they're listening because Adriana asked questions. All right, well, that went very fast. And I don't know whether you guys would prefer that the classes be longer or not, because I definitely could have dragged that on for a very long period of time. But if you're like me, I like to get to the point and get you guys the information that you need so you can go out and do business.
Well, I have some general questions.
Yeah, go for it.
I haven't sat down with you guys about what you offer. So what's your interest rate like?
So our interest rate, oh, sorry, I didn't mean to cut you off.
No, I think that was done.
So interest rates are really varying right now. For the most part, though, they have been on the higher end, and we are expecting a rate hike today. FHA and VA loans have been sitting in the mid sixes, high sixes. When we've had really good days, they've been down high fives, low sixes. Conventional loans have been really ranging anywhere from 6.5 to 7.625 and higher. Yeah, and it all depends on the client situation.
Okay. How soon can you close a non-conventional loan or an FHA loan?
So an FHA, conventional, VA, we can do them really easily in 21 days. We can do a shorter period of time if we absolutely have to, but we would rather not do it faster than 21 days because it puts a lot of stress on our processor and getting the appraisal out and everything. But if it absolutely needs to be done, I know we can close them in about 14, 15 days.
Okay. Are there any, do you guys do like first time home buyers? Do you guys work with lenders that do have any like first time home buyer programs? Like what's out there for first time home buyers?
So there are a lot of, yeah. So obviously like there's Cal HAPA, there's the Golden State Authority, which the GSFA also has a down payment assistance program. I want to say that Sacramento City has something specifically for first-time home buyers. I have not seen anything on it, but that's what I keep hearing in the lender world with just talks. So there are programs for first-time home buyers. Some of them are grants, some of them are loans. It's really going to depend. And some of them have very specific requirements that you have to meet. And a lot of times what we run into is our clients don't meet them because for the ones that tend to give what seem like more favorable terms tend to be for people who are very low income. And so then we're really walking a fine line of can they even qualify for the loan? And with most of the purchase prices these days, they're not able to.
Yeah. Okay.
You're welcome. I saw Claudia hop on for like a half a second. Does anybody else have any questions? Oh, so Adriana, you were asking kind of like what we do. So obviously we do conventional, we do FHA, we do VA, we have a mobile home broker that we work with. One thing I would like to share with you guys, because I think people have a lot of misconceptions around this. When you come to us with a mobile home application, we're going to connect you with Curtis Steen, who is part of our broker network. Sorry, I was looking for the right word. Curtis is amazing at his job. However, like pretty much every mobile home lender that I have ever met in my entire life, he is not the best communicator. So if you have a mobile home client who is out there that really needs to be like chased down to complete things, just know that Curtis is not going to do that. On an average, they get 50 mobile home applications a day. So he does not have time to help with tracking down clients. I actually had to have this conversation with a real estate agent over at Rapisarda because he was very upset about the fact that Curtis wasn't chasing down his client to get answers and following up with him. And I had to just tell him, listen, if your client fills out the application, Curtis will be on it. He'll get it submitted to underwriting. He moves very quickly. He's very good, very knowledgeable at what he does. But again, he's not going to be that person that's going to chase down your client. So if you need help following up with your client, please let me know. And I will do my best. Just know that once they submit that application to Curtis, I can't see anything on that end. So I can't see if they've completed the application. I can't see if he's submitted to underwriting. But normally once he's submitted to underwriting, he will email us and your client to let them know that that's what's going on. And then we'll email us once they get a response back from underwriting. And I bring that up because mobile homes have been very, very popular lately. They even mentioned it at the Zillow meeting on Friday. So, and we also do like investment loans. So not a lot of people work with investors, but there's debt service, cover ratios, which are DSCR loans, which are an investment specific where we can actually qualify them off of the property and not off of the person who's filling out the application, which is kind of a fun product to work with. I know it sounds like it wouldn't be, but I actually really enjoy them. And we have a bunch of other investor related products as well. And obviously we do have jumbo. For the most part, most people don't need it. They've been putting down enough money to stay within conforming loan limits, but we have done a couple of them recently.
Hey, on your investment product, what's the down payment on that for the?
So depending on who you're with, for the most part, it's 20% or more, but we do have, I want to say 1 or 2 that will let you do like 15% down.
Okay, cool.
Yeah. Lonnie, you had a question?
Yeah, so I was wondering, because I do have a friend / client, potential client. He was looking into purchasing like a commercial property in Oakland or in the Bay Area.
Okay.
Do you guys do commercial?
So, Brett and I do not. If you want to do commercial though, talk to Tristan because Tristan does do commercial and we do have the ability to broker those out. Just like we would our normal loans. But Tristan handles all of those because he's the only one of us that does commercial. I know Brett knows about it. But for the most part, Tristan handles all of our commercial deals.
Okay, thank you.
You're welcome.
Can a person who lives out of the country qualify for an investment loan?
You're wondering if like a country property would qualify for an investment loan?
No, if I have some clients that live in Spain, they're looking at properties, but they're looking at doing seller. Right now, they're looking for properties that are offering seller's financing. So I'm just wondering if and there's the way for them to qualify for an investment loan.
Oh, okay. So they're looking for something with seller financing, which is normally where their seller is going to carry the loan and then you're going to pay the seller who's going to pay the loan. We don't touch those. But if they have money to put down and they want it for an investment property, they may want to look at a DSCR option where the home is going to qualify and not them, but they're still going to have cash to put down on that property.
Yeah. Okay. And do you guys do that?
Yes.
Okay.
Yeah. Seller carried financing is something we don't get into because that's if the seller wants to do, that's up to them, but it's very difficult for the most part to find a seller who's going to carry that loan unless you're talking like a parent getting a loan on a home for a child. For the most part, or what?
Or North Idaho.
Yeah, right.
Happens all the time up here.
Yeah. Yeah, I could actually see that. I could see that because it's very Idaho is more like the Midwest. And back in the day, you probably could have gotten somebody to do that in my hometown too, but not anymore. Not since the oil boom. It changed the entire dynamic of our state. And that was just weird. So, but I haven't seen it in California. Does not mean it doesn't happen, but I just haven't seen it.
What was the name of that loan again?
It's called a DSCR loan.
DSCR?
Yep, debt service cover ratio.
Okay.
Actually really like those loans. Not a lot of people do them because a lot of people aren't doing investment properties right now with current interest rates, but
yeah, for a while I felt like everybody was offering those. And then recently I reached out to a couple lenders and I was like, hey, are you still doing those? And they're like, no. I was like, yeah. How do we go from everybody doing them to nobody doing them?
No, it's crazy. Well, and the other thing is we do have a bridge loan option with Windsor. It's pretty much the only company that's really doing them right now. And it's who everybody's using. Like Stephanie Ham uses them. Jason Russell, Ashley Miller actually just left GTG and she is now an account executive for Windsor.
Nice.
Yeah. So little updates in the mortgage world. All right, guys, do you have any other questions? All right, just a reminder also, we do open house flyers with financing terms on them. So if you would like open house flyers for your open house that's coming up and you'd like some numbers on there, let me know. I'm happy to do them for you. Just please get them to me before noon on Friday if possible, so I can make sure that they are done. And then normally I just have Carly print them out and then they will be at the front desk waiting for you. But they're a nice little thing to have, especially with the interest rates always changing. So if you ever need anything, let me know. I do also do open houses. So if you're looking for company, again, feel free to reach out. If you don't have my number, pretty much Carly, Melina, everybody in the office does. So feel free to reach out.
Thank you. Thank you so much for coming on today and
share your number
on jumbo loans.
Oh yeah.
Share your number, Miss Jessica.
See, I haven't had my coffee yet this morning.
You're the best.
Anything, feel free to reach out. I am available on the weekends too. Even if I am out of town, please don't hesitate to reach out to me. I will definitely am more than willing to help. Whether I'm here, whether I'm gone, I'm your girl. So let me know what you guys need. Other than that, have a fantastic day. And hopefully we'll see you guys all for the meeting in the office. Well, I don't know if it's in the office, but the office meeting next week.
Fabulous. Thank you.
Bye, guys.
Thank you.
Thank you. Bye.